Jeff, good morning, by the way. I almost said happy Monday, but it is Tuesday. Thank goodness, I guess, because this market rout looks like it might continue today. Futures selling off sharply in just the last hours, and most futures traders aren't even working yet. Unlike UI and Rahel, what do you make of what is happening with technology right now?
Well, Sully, you're absolutely right. We are seeing selling pressure again this morning in the NASDAQ 100, down about 1.5%. But let's put things in perspective. I need everyone to take a big, deep breath. Since January 1st of 2017, these top 5 stocks that we talk about all the time, it's the FANG stocks, Sully. Take out Netflix, put in Microsoft. So you know all the culprits here: Facebook, Amazon, Apple. We're talking Microsoft as well as Google. Since January 1st of 2017, up over 270% compared to the broader market in the S&P 500, up about 55%. So this wind coming out of the sale, we did see 2 days, absolute rout like you talked about, down 7.5%, down another 1.5%. But in the bigger picture, in the context I'm trying to provide, there's a lot underneath the surface here. We had the SoftBank news. We had huge institutional buyers last week really come into the market. And then at the end of the day, we're 8 weeks away from the presidential election. So there's a lot of undercurrents here we can break down further, but I'm still pretty optimistic about tech, pal.
You really are, even after what we saw Thursday, Friday, and what looks like may continue today, Jeff.
I am, and let's break this down. This was a long gamma trade. And for all the folks out there, what is gamma? Gamma is simply the rate of change in delta. What is delta? Delta is simply a measurement. We're talking a lot of Greeks here, but I really want to break this down because this is important, Sully. Delta is simply the change in the option prices in relation to the underlying stock. So if a stock has a delta of 50, that option has a delta of 50. If Apple, for instance, was to move up $1, the price of that option would move 50 cents. So now that we understand what delta is, what a gamma trade is, when you see the velocity come in, like SoftBank, every time they spent $1 billion on premium to do the stock replacement of these long call spreads, exposure to the upside, once we saw that come in, that really made some waves of hedgers having to buy back the stock. So that bit of a melt up we saw in those top 5 stocks, this is a bit of the unwind. You put that in conjunction with an institutional buyer coming in, $100 million at a time, notionally, buying 3350 puts in the S&P 500. You saw some anomalies last week in the VIX and the option premiums that really disturbed some people. So I guess my point is, Sully, we saw a big, big rock get thrown into the pond. We saw some waves. Now we're seeing some ripples. I think that pond is going to remain calm, but there is going to be some uncertainty. Of course there's uncertainty. Historically, there's always uncertainty going into a presidential election. This is a little bit special at this moment in time, though.
Well, okay, there's a lot to unpack there. We talked about this first on Thursday of last week, introduced the phrase gamma squeeze to our audience, and you laid it out very well. The idea behind it, folks, is this, and what Jeff is saying, and Jeff, you can correct me if I'm wrong or pile on, which is that if you place these big options bet, somebody has to sell you those calls on the options. When they do that, they will often buy the underlying stock to hedge their bets. Well, when that rolls over or goes south, they've got to flip it, perhaps sell that underlying equity. And I think a lot of big banks and trading shops, Jeff, may have found themselves suddenly off sides, to have a football term, late Thursday and Friday. And now, here's the question, though. If that's the case, that should be a relatively short-term phenomena because they just need to right-size their hedge books and their balance sheets. But right now, it's looking like it may not be. What do you think?
Well, it's a great point you bring up. I like the football analogy of being caught off sides. It's the aggressiveness in the movement. When you saw SoftBank come in with that gamma trade in conjunction with the put buyer, that aggressiveness, that velocity in the market really threw things out of balance. But to my point about being optimistic, Sully, is that I think this is part of the unwind. We've heard the rotation out of the NASDAQ 100 or these top 5 stocks more in the industrials. That was just a myopic view last week when we saw what happened in comparison to the broader market. So when you see a 10% drop in those top 5 names, of course it's going to be an effect. This is the largest concentration we have seen in 5 stocks in decades, going all the way back to the bubble of .com era. So I think this is unusual. This is extraordinary. In the wake of COVID-19, there's all these different pushing points with the presidential election, but in the bigger picture, we're going to digest it. This is palatable. No panic, Sully. Hang in there, pal. Click in that seatbelt. We're ready to rock.